Alrighty guys, how you guys doing today? You guys know the usual, just gotta make sure audio levels are good, make sure we're all good on the technicals before we get started. Happy Thursday, hope you guys are doing well. Alrighty. Cool. Alrighty guys, we are all good to go. Welcome back to MTV today guys, I'm your guys' host, Trent Manager. All my attorney patrons, welcome back, and glad you guys are here today on this Thursday. Of course, all my new individuals and all my new patrons and viewers, welcome. Really glad to have you guys here. You got another great day, guys. Another great Thursday. Got a lot to cover today. It's gonna be a little bit of a shorter video. Try to keep it under 30 minutes like usual, but we do have a good amount of deal information to go through, but I don't think it'll take us that long to go through. But definitely hopping into our agenda for what we're going to cover today. Also, I need to thought about this, doing timestamps. You know, a lot of you guys maybe want to fast forward information that benefits you the best, or sorry guys, I'm actually going to move my mic a little bit closer. I got a new boom arm, so it's still getting used to the positioning. But today, guys, we're going to cover over some pretty good articles, some really good ones I found that surfaced this week. We got a lot of bullish news, especially on the Ethereum side. So this is going to be more of an Ethereum top-heavy video. We'll be chiming into Bitcoin, but right now there's definitely some other waves we got to definitely check out, just because there's a lot of bullish news underneath the Ethereum scaling solutions, and a lot of great things coming out this week. So first we're going to go over Carl Icahn, or I'm going to say how you say that, Carl Icahn. So he and Ray Dalio are some of the top wealthiest individuals, especially on the hedge fund side. We're going to come out, and we did talk about Ray Dalio on Tuesday. He came out and said, this is what I'm buying, and this is what I believe in. Also going to be covering the mining conference from what happened in North America. I know we talked about that Tuesday as well, about Mr. Saylor and Mr. Musk coming and getting the mining conference together. We talked about also a lot of the hash rate, and a lot of the miners are moving out of China. We're going to go over the SEC and Gary Gensler. We talk about Gary a good amount. He taught at MIT, done some lectures there, and we know that he's been big blockchain friendly. For all those who haven't seen Gary Gensler's lectures at MIT, I definitely recommend them. They're not that long. He's got a whole series, but it's like 20 to 30 minutes each episode, but I think it's super great. He does a super good job, and I think he's a pretty good role for the SEC fit. And also we're going to go over, Apple, about to accept cryptocurrency, which is good. We're going to going into them and looking at their job postings, and they got a nice little setup that they got. They're looking for an alternative payment director, or someone that works. We'll be going over that article as well. And also we're going to go over PayPal and Robinhood's follow revolt for planned crypto withdrawals. So for right now, you can only hold, especially with Robinhood and PayPal, that's been the big issue, is that when you want to cash out that currency, or either move it or whatever you need to do, you cannot withdraw that currency from that exchange. So you would have to flip that into cash, and then therefore move it into another asset. And that's kind of a big problem with a lot of individuals, especially on Robinhood. No one, you'd rather just be able to export that and send that directly, not having to basically have that extra step. And that's been something that those guys have been wanting to do for quite a while. So alrighty, we got over the agenda. We're done with that. So we're gonna hop into our first article, and I got one video for us today. So I think we got 1, 2, 3, 4, 5. We got like six, seven readings. But like I said, guys, it's not gonna be a crazy busy day today. But overall, really good, really good day today. Actually, no, we have 2 videos. So sorry. But legendary billionaire who's called Crypto Ridiculous now wants to invest $1.5 billion in the market. So this is nothing new. We've seen people come around, and this has been a year of learning. Education's a big thing, and that's the biggest barrier to entry, I believe, with either becoming a developer and also just really understanding the technology as a whole. That's the big barrier to entry is education. So 3 years after saying he wouldn't touch that stuff, Carl, I do not know how to say his last name, Icahn, considers entering the market in a big way, he says. He quotations in big way. So looking at the whole business, and we're going to play this clip after we cover 3 years ago CNBC interview, he calls it ridiculous, but after studying Bitcoin and Ethereum and the crypto markets as a whole, he changed his mind and is considering enter the crypto markets in a big way. So that's the big one for me, calls it ridiculous, but after studying BTC and ETH, or just having education in general, his mind has changed. There have been projects that I've thought about that I didn't think were very good, didn't like the white paper, didn't like the production team, and I did more research, or I kind of saw a different side or maybe got different information, your thoughts can easily change, and that's something that's doable. So we love to see that, especially someone of high net worth individual, especially someone in the billionaire section. That's really something we really like to see. If you guys have been here a while, we've seen a lot of these guys change. We know Kevin O'Leary from Squawk Box, and if you guys know who Kevin O'Leary is, I definitely recommend watching CNBC in the morning. We've seen him change his narrative. He's been there for months now. We saw Ray Dalio on Tuesday announced last week, that he's had a change of heart, and these guys are older guys. Like, this is realistically, like, this is kind of something that, like, if your grandma gets it, or your grandpa, like, these guys are old enough to be your grandparents. So, like, if your grandma or grandpa gets it, there might be there should be a light switch kind of, flip it on in your head for you to, kind of either do a little bit deeper research, or, maybe you're just maybe not reading the right stuff. Like I said, the news outlets it's very hard to find accurate and true news outlets, especially in the crypto space. So that's why I recommend definitely on Blockchain Today, or On Chain Today. Not Cointelegraph. Cointelegraph isn't very good. I'll list a couple others in the Patreon for you guys, but there are a couple that are pretty accurate and reliable. But not wasting more time, I'm going to play this video real quick for you guys, and you're going to see what he has to say about, what he did, because they had him on CSBC, or they had him on Bloomberg, sorry.
I'm not looking at what to buy.
Sorry, the quality's terrible.
This time. I'm just looking at the whole business and how I might get involved in it with Icahn Enterprises in a relatively big way, because I do think it's here to stay in one form or another. I think
relatively big way. What does relatively big way mean, Carl?
Well, a big way for us would not be to buy a few coins or something, wait, I'm not going to buy a few coins. I don't believe in trading the market if I can help it. I've learned
hundreds of millions, billions. Is that what we're talking?
Yeah, I mean, it could be.
Wow.
I mean, a big way for us would be, $1 billion, $1.5 billion, something like that. But that would be a sort of a big way, I guess, for us. But sometimes we go bigger than that. Sometimes a lot smaller. So I'm not going to say exactly. But to get back to I guess a way to really get back to the concept. But a lot of these other things, though, I think out there are overvalued. There's no question about that in my mind. But that doesn't mean that necessarily. And I was saying about cryptocurrency, to get back to it, I don't think there will be a lot of the survivors that are out there trading today in it. I don't think so. I think there's got to be some form of really feeling there's safety and value there.
Wow. That was a good one. I mean, just coming from someone like that old, and, the big splash, like you talked about, the big way, it's not easy entry for them. It's not, hey, we're buying a couple coins. It's, hey, we're kind of going all in. And, just from a work standpoint, because I talk to guys around this age group and a little bit younger, but around mostly that age, especially these older guys, these CFO and older company guys, it's hard for them to grasp. But when they do grasp, I've seen it in a couple guys, especially older, who have that light switch instinct, and you kind of see it in their eyes, and it kind of just, it's that real quick snap, and they can really grasp it. It kind of reminds them of the early .com boom. That's something that we kind of stress a lot on this channel, is that we teach more of the information than the teaching, because I'm not here to shill coins and tell you to buy this and that. This channel is primarily for information and getting the accurate information as to what is true. So that should definitely be a thumbs up. I didn't mean to spend that much time on that article, guys, so sorry, but I think that was a really, really big idea, just because we had Ray Dalio the same week come out, another insane pickup in terms of billionaire access and high equity. So definitely going over to our Bitcoin mining council as well. Saylor and Musk, what transpired in the meeting. Mr. Musk always makes the pull out. I don't like talking about him as much, but it's just he's coming less and less relevant, but he's still relevant right now. So the Bitcoin mining council, Saylor and Musk, what transpired in the meeting. Long story short, we covered this on Tuesday as well. We knew Michael Saylor came out and got some minings together. We knew yesterday on Tuesday that a lot of the mining pools in China are moving out of China, trying to spread out that capital and that hash rate. We knew that was a big concern from the U.S. I know that was a huge concern with a lot of these guys getting ETFs filed, and having to sit with that, and have to accept that, hey, majority of these hash rates are in China, and then we had the whole green narrative, and we've debunked that plenty of times, so we're not going to go too deep into that once again. But overall, just kind of skimming through this because it is a bit long. Michael Saylor goes back and forth, talking to Peter Wall. Peter Wall was one of the biggest North American crypto miners. He runs one of the bigger mining cartels in North America. These guys have now formed the Blockchain Mining Council, making therefore kind of like a super hub, mining council in America. So the cool thing about this, I'm kind of going to go on my own right now and kind of just, because I heard this in an interview, and I'll have to find the interview exactly what I was talking about. I was watching CNBC. But the reason this transpired and why I think it's so good, and especially with the green narrative, as how it's going to be moving is, so if you have a family, just like you had a family farm. I think I explained this a little bit on Tuesday as well. If you have a family farm, and let's say, like just like family farms, your father's a miner, and therefore you get in the family business of mining, and you're using 75% renewable energy because your energy cost is your biggest issue with proof of work coins such as Bitcoin. So mining algorithms need to execute, these hash rates, and therefore rewarding miners with Bitcoin or whatever it may be. The biggest issue, or not even the biggest issue, the plus with this is that, not only are you giving people an outlet for what we call, a job source, but also, just like a farm, just like you think about, just think of crypto cartels as, mining farms. And the reason I say cartel is just because it's a big collective group of, individuals. But going back and really explaining how people can make livings off this, this can be generational wealth for a lot of people. This is a whole nother class as to what people can do to, fill that job gap. And not only that, is that it gives the push more incentive to use more green energy, number one. And also when you're saving cost on money, since electricity is your biggest issue as a miner, that also gives you the higher incentive to do even better. So there's a chance that, not only are you, fighting, the planet to, do better, but you're also being rewarded for it at the same time. So it kind of gives that incentive to like reward, versus, thumbs up. So like a pat on the back, the more pats on the back you get, the, more you're going to want to do well. And, the more they do well, they're, going to be rewarded for that with their, less power consumption. So I think that was a really good one in that. If they get that in the way I think it's going to, and they get it in like a full free cycle effect as to where like, you get into the mining business and, it transpires like that, and, you could start cycling and funneling where it gives the incentive to people to mine, because not only it can be a whole really wheel system that can definitely benefit people in such a really good way, providing jobs and outlets and things along those lines. But we'll definitely see how that goes, but I'm liking the way that's going right now. And also Gary Gensler, our SEC leader right now, just like we talked about, our MIT professor. Gensler came in, he got hired in the Biden administration, so he took over the role of, I don't remember her name. I'm going to have to go back and remember who our SEC chairman was before that. But long story short, Gensler, through the article, he talks about crypto regulations, how we're going to do this, and kind of protecting people and over sense of crypto, and how we're going to keep moving forward and keeping the regulations going. So regulation is not always a bad thing. Usually I notice when people hear regulation, they're like, oh, like blockchain, like crypto, like no, we don't need regulation. Like what? Like that's the whole point of having a blockchain. Like yes and no, because regulation doesn't always mean, hey, I'm going to be all up in your business, I need to know what's going on. And of course the IRS, and we know that, and the issues that we've had with governments is that they want to be all up in your business, but they understand that regulation is just something you have to have with everything, with food, with everything has regulation. Driving, like it doesn't matter what you're doing, you have to have regulation. So in terms of what Gary wants to do, and like we talked about how the SEC wants to make these regulations, is that they'd like to know with single point of failure exchanges such as Coinbase, Binance, KuCoin, Voyager, all those type of guys. And we're gonna kind of explain further when we get to our Ethereum section as to how and I'm gonna make a separate video on DEXs and kind of really get in deep with that, just because I don't want to get too off topic. But he even says here, this is one of the many regulatory gaps in these crypto assets. He said, decentralized DeFi has found itself in the SEC regulation crosshairs, as there is a platform to raise a number of challenges for investors and SEC staff trying to protect them. And when we do go over DeFi, and we've talked about it plenty of times in this channel, is that, what they're mainly worried about, guys, seriously, is these guys like early adopters and people who have cold storage. And we've talked about what cold storage is. It's offline storage for your cryptocurrency. So the only access, it's the most secure way that you can pretty much store any asset right now. You have the better chance of hitting the lottery, I think 50 times in your lifetime than you do of cracking a cold storage code. And the most important is that they're worried about cold storage wallets, people who haven't touched their cryptocurrency in years, or people who move them offline and don't have access at all. Public blockchain ledger, of course, but still, it's very hard to regulate once you move from cold storage. It sits for a while, or after it gets off cold storage to DeFi, it's pretty much untraceable. It's very, very difficult. So the regulation, there are loopholes and things that they have a lot to do in terms of trying to figure out the best they can. But if we're being 100% real, guys, there's only so much they can really do in terms of regulation, and I think it's going to be on a very light scale if we're really going to think about it. There's not so much. I don't think they're going to be digging your hands in your bag too much, but definitely want to cover that because I thought that was really important, just to kind of give that awareness. But also going over to Apple. This is what we talked about earlier. Apple coming out with their cryptocurrency job offer for alternative payments. Key qualifications for the role by CoinDesk included 5 years plus experience working with alternative payments, digital wallets, and NFT platforms, working pretty much with blockchain and Solidity. Pretty much everything that a blockchain developer does. Kind of like myself, I wouldn't apply for this role though because that's a little bit too much for me. And Apple's top tier, but never know. I mean, whoever gets that job, it shows their interest. Apple's kind of been very neutral. We had that rumor a couple weeks back of, Apple coming out and they're going to buy it. And then we had Walmart as well, and it just never folded through. But we knew that Apple had their eyes on the prize for quite a while now. They just haven't been very up to date and, open about it, just like Walmart. And, the government has had nodes open for years, processing nodes. For XRP and different cryptocurrencies. So these guys have been in the loop. It's just a matter of these guys just do not come out and say things willy-nilly, like a lot of these, Twitter crypto influencers or other people in the space who openly, give chats about this type of thing. But these guys they're ahead of the curve, just because they haven't came out and said anything doesn't mean they're not doing it. So that's why I always say follow the money and definitely not the talk. And switch over to our PayPal and Robinhood. Follow Revolt for plan of crypto withdrawals. Just like we talked about, Robinhood and PayPal have been working overtime for this. They're trying their best because this has been a heavily requested thing, especially from the Robinhood side. It's definitely a bigger thing of not your keys, not your crypto. That's been a big thing, is that if you don't have a cold storage wallet and you're trusting an exchange or anything centralized like Coinbase, Voyager, Robinhood, all those, you do not technically own those coins. You are just kind of having a slip of paper that's presented to you saying, hey, this is Robinhood. Here is Trent has 2 whole Bitcoins. This is the piece of paper that notifies that and saying, hey, he is allowed to sell these 2 Bitcoins, versus having your private keys and therefore you can own your coins and then do whatever you need to do. So that's important, but overall that's very bullish news that these guys are working hard for this, because we've known that this has been something that these guys, customers have been asking for just for a long time now. This has not been new information at all, but it's a great thing to see, and it's very good bullish news, that this is here to stay and we are still moving forward. We're not going anywhere. So also we're going to have a quick watch of our CNBC fintech company. We're talking about Ripple CEO actually hops on here and talks. This was yesterday morning, so I did miss that. We're going to save that for the end, just because I'm trying to keep on time here. We're still 17 minutes in, but we'll save that towards the end. But also hopping over to Twitter just quickly, we're going to be hopping into our Ethereum coverage news now. So I think the rest of our video is going to be more of covering Ethereum news and why things are really heating up, into why I'm very excited for today, tomorrow, and next month in July for our massive EIP 1559 roll up. So arbitrage. So hearing a lot about arbitrage lately, and what is arbitrage? So arbitrage is arbitrage is an optimistic roll-up solution built for Ethereum scaling, and we knew that layer 2 scaling solutions were coming, and we knew that we needed this for Ethereum to continue to performing. We knew the gas fees are crazy, and the integration and the barrier to entry for new users in the Ethereum network was very, very tough. And with this coming, what arbitrage is going to be doing is introducing some new scaling solutions, some ZK rollups, which are just better optimism solutions for keeping information inside blocks, more sub-to-side, so making more information, more data in blocks, so it's less expensive to send and basically more effective. So why this is so important is that this came quicker than most people really thought was going to happen. We knew about our EIP 1559 update, which is our massive fork of us going from proof of work to proof of stake, and I'm going to make a separate video on that just because that's something important that I think I need to cover. And for all the guys who there are people who've been here a while, and they've been like, oh, you cover Ethereum more than anything, and you're just shilling Ethereum and all this stuff, oh, you really only talk about Ethereum. Well, number one, I worked with Ethereum long before I invested in Ethereum, and also that is one of also my biggest holdings, and also that is my job. So, and this is an information channel, so I definitely had to bring that up just because I'm not shilling this for you to buy it. I'm giving you the technology background just so that's something that can open up doors in your mind and show you why I do this career as a job, because it truly is amazing when you understand the technology and what it could really do. So I did a quick little AWPP roll up just to kind of, it's very messy, so sorry if it's kind of hard to read, but we're going to break it down. And the big things with ZK rollups, and the reason this is so important is for a couple reasons. I got the ZK rollup on the side. So our pros and cons first off, we're going to go over just the simple overview of what a ZK rollup is. The ZK rollup scheme consists of two types of users, transactors and relayers. Transactors create their transfer and broadcast transfer to the network. The transfer data consists of indexes to and from the address. The value transacts network fee, and notice a short-term byte extended version. And then also going into our user experience, users on a DApp running ZK rollup scheme will pass less in transaction fees, creating zero knowledge proofs, requires a large amount of computing power. So just how we talked about, we covered a little bit a while ago, is that when we put these functions and these data inside these smart contracts, some of these rollups, like we have talked about, contain more sensitive data that is more expensive to send. So if I were to put a function that says this needs to execute when, I'm sorry, actually, let me take a step back, guys. I'm sorry. So if it goes off the if then Y function, so if Trent pays by this date, then Trent will not have the penalty of 5% down. And then that's the same way that it works with those ZK rollups, is that you can put multiple functions if then Y inside your smart contracts, therefore executing in the orders of like 1, 2, 3, 4. So you can't have step 3 without having step 1, or you can't have step 4 without having step 2. So there you go. That was a way better explanation. So going into our quick little AW board is that, when you have the ETH mainnet and you have rollups, we have our little rollup chain, and really just passes through the blocks. So, we got 1, we got 2, we got 3, we got 4. So what this can do is that when we have the ETH mainnet with the dotted line, is that these sub-side blocks of 1, 2, 3, and 4 can now take the 1, 2, 3, and 4 that we have here, put them inside one block, and contain all the information inside one, versus having like this. So instead, imagine it would just be, and everything in this would just be 1, 2, 3, 4. So it just make pretty much one block. That's why I have the links and the arrows together, just to kind of simulate that. And also to cover too is that people are kind of getting confused with the how the gas fees are going to work. And this is not going to take away the high gas fees, but it's going to what we call implement our token burn. So what Ethereum is going to be doing here is a pretty big deal. It's going to be burning a lot of tokens during prime time network usage. So we've seen if we pull up just Etherscan right now, just for quick representation, we can see our estimated gas fee usage. So the reason we have gas fees, we talked about this. Gas fees is literally the reason we use it is, number one, because we're on a proof of work system. So miners need to be rewarded for their actions of mining algorithms to put this ether on the blockchain, and for exchanges, number one, and also number two, it keeps the network and the congestion out of. It keeps it low, and it keeps things not getting staggered and confusing. So, and also the reason we have gas fees is to no one's going to use and spam the network that you have to put real money on. No one's going to waste real money on putting faulty transactions on the blockchain, and especially on Ethereum, it just wouldn't make sense. So that's one of the reasons we have gas fees. So going back to our proof of work and proof of stake, so we're moving from proof of work to proof of stake, so validator nodes, and there will be no need for mining algorithms. So therefore, it's going to be cutting out proof of work. And when we cut out proof of work, we have proof of stake. And what this is going to be doing is moving forward when we have we have prime network performance. So when we go to, let me do a quick little drawing. So we got prime network usage. I did the F for the fee for our gas fee. So we're going to be cutting that gas fee out when we eliminate proof of work. And then we are just going to be making this bottom layer. I'm just going to act this as a gas fee, and this is going to become more predictable. That's basically what it's happening. So you can now, just like we see on Etherscan, you can see that our gas fee right now is a bit lower, but eventually when we have our rollups and so on, it's going to become easier to predict. So the gas fees will ultimately be lower, and on top of that, Ethereum will be burned with every transaction. So what that means is that your gas fee and whatever you use to send your Ethereum, that token will be burned, therefore making Ethereum a little bit more scarce, just because Ethereum is not a cap supply, just like Bitcoin is with a 21 million supply. But this is going to make ETH a lot scarcer and make the incentive that you using the network is going to make it even more scarce. It's a different system, and I know maybe that did not make sense to some of you guys, but I'm a big implementation. I like explaining critical things to people because you either pick it up or you don't, and that's fine. But I think this is something for you to know, very important, because this is, especially if you're investing in Ethereum, this is something you have to know. So pros, user fees, and reduce and faster, than Optimism, at least for ZK rollups, until we get our full layer scaling solutions. ZK rollups are going to be working very, very well, and that's super important for us moving forward. So Cool. All right, guys. Yeah, sorry. I know that might have been a little bit of a brain bust, but I think I like doing stuff like that because not only for me being a developer, but I think it's really good for. I think everyone should know at least a little bit light side of the coin. Like you need to know side tail, side heads and tails. Like that's a good. I think it's really good for everyone to know that type of stuff. Whether you're a developer or not, it's good to know what's going on inside the system. So. All right, we're going to go back and watch our quick little fintech video, and then I'm going to double check and make sure we're all good for the day, and then we're going to cover these last two articles, maybe do a quick little Bitcoin update on the chart, and then we are going to get out of here, guys.
NBC is also rolling out the 2021 edition of the Disruptor 50. These are private companies on the cutting edge of technological change. Right now, we've got an interview with the head of the company that's coming in at number 38 on this year's list, Ripple. The company uses blockchain to send money across borders for financial institutions, and it uses the token XRP to do it. Join us now, Brad Garlinghouse, CEO of Ripple. Brad, great to see you. Great to have you on today. Let's start just generally about the crypto arena and what we've seen, because there's an article today, Brad, about, I guess it's harkening back to the colonial situation, pipeline and ransomware, et cetera. And the thrust is that we just need to ban crypto. And it's set forth, here's all the reasons. I think about everything that you've set up with blockchain and DeFi and how this can really effectively replace a lot of existing systems like Swift or whatever, and it really works well. Do you think that, what do you make of someone that makes that case, given all the blockchain infrastructure and everything else, not just around Bitcoin, but do you think that this toothpaste ever goes back in the tube like that because you can use it for ransomware?
Not sure I've heard the toothpaste analogy before. I'm going to steal that one myself. Look, first of all, thank you for having me. I think the question you're asking is a really important one, and I think it gets to the kind of the core of sometimes just a misunderstanding about how these technologies can be applied in a way that actually is really good for businesses, for citizens, for just the community at large. And so when we talk about, like, should we ban something, let's make sure we understand what we're talking about. The way Ripple uses these technologies, as you introduced, is we can make cross-border payments, which are slow and expensive today. We can make them real-time, very efficient, very low cost, and that's good for the global economy. We can unlock trillions of dollars kind of trapped capital to make the economy more efficient. And so blockchain technologies can be applied in a lot of really constructive ways. It's reducing friction, whether that be transaction cost, transaction speed. Again, for Ripple, that's around payments. But I think to say, hey, let's just ban all this, yes, the toothpaste might already be out, and I don't know how you get it back in.
The other recent, I guess, data point was China with Bitcoin, and just overall, let's talk regulation, because Ripple is unique in certain ways in that you kind of control the amount of XRP that's out there and decide when it can be issued, and actually the SEC took issue with that, so to speak, in that you might be more like a security than a currency, and that's still pending. So just talk in general about all regulation and how it might affect you and Ripple even differently than it would affect Bitcoin.
Well, I think what you're getting at the core really is, in the United States, there has been a lack of regulatory clarity. This is something I've been talking about even on CNBC for about 2+ years. In other countries you have seen, in the UK, Japan, Switzerland, Singapore, these are G20 markets where they have invested the time and energy either through legislation or rulemaking to provide that clarity and that certainty. And that allows investors to participate, that allows entrepreneurs to build, that allows people to build companies that make the CNBC disruptor list. So here in the United States, we haven't had that clarity. I think, just to correct something you said, Ripple actually doesn't control XRP. XRP is an open source technology, very analogous to Bitcoin. In contrast, XRP is very efficient in terms of speed of transaction. It is a carbon neutral blockchain. So these are all examples of it being more efficient, but all of the XRP that has ever been created has already been created. So it's a zero inflation dynamic. But the core of what you're talking about around regulation, I think, is what we're experiencing here in the US with the SEC. The SEC is making the assertion that these are investment contracts, that Ripple's sales of XRP to our customers is actually an investment contract. And a security is something where when you buy it, you own part of a company. You have a right to the profits. You can vote on the board of directors of that company, all of those things that are, certainly CNBC covers in depth. That isn't true with XRP. If you buy XRP, you don't have a ownership of Ripple. And I mean, ironically, you actually have XRP owners who have tried to sue the SEC for even bringing the case.
Brad, what's the total number? It's billions, obviously, and you do have a lot that hasn't been mined yet and can control when some of it is mined. That's correct, is it not?
No, that's not right. The way XRP works is fundamentally different than the mining contract, the way you're describing it. So proof of work is the mining. That's how Bitcoin works. That's how Ether has it worked, and it's kind of migrating to proof of stake. The XRP ledger uses something called consensus algorithm. And so all of the XRP ever created is 100 billion units. Ripple owns a lot. And so that's on kind of our treasury, and we can control how we sell it to customers. But there's no more XRP that can be created.
Shepard Smith here. Thanks for watching CNBC on YouTube.
Alrighty. So, I mean, I thought it was a good one. I know we've had a lot of just issues with that. Ripple's had their fair issues with SEC, and, they're about to win their case. So, I mean, it's good to have, especially, I'm not invested in Ripple. I don't know a ton about Ripple and XRP, but I have a lot of good homeboys who support XRP and really like it for a long-term project. And they've been in the space for a while. They've been some of the OGs, and they know what to really expect. They've been going through this for quite a while. So really about to wrap up, guys. Just real quick, gonna be going over $13 million locked in Ethereum right now for the 2.0 London hard fork insight. London hard fork is just the name for our EIP 1559 update. So we've seen a very huge influx. So basically, this is great to see, because you're seeing people trust the Ethereum network, and they're willing to lock up their Ethereum and their staking rewards, and they have trust in the network. If you're locking up anything for a certain amount of time, whether that be 3 months, a year, 2 years, even just a month, you trust the network enough to leave your funds and leave your money in there and expect things to continue, going up in the way that you expect them to go. So, Ethereum validators noted that the current price is over $13 billion worth of assets is now staked. That's a big one. I stake a good amount of my Ethereum. I do stake Ethereum, and big supporter on that. And, it's good to see. I mean, that's really the number one thing you want to see, is that you see people trusting this network, giving their hard-earned, giving their money up, and, not always just giving the money up, but trusting the network is the biggest thing that, I take away from this. And, this has been on the rise for weeks now. We've seen this anticipation with the update come, and we've seen, like we said, with ZK rollups, optimism coming, user experience. We've seen, things positively, that are coming in the space, and not only with the bigger players, but we've seen a lot of the narrative shift, from, Bitcoin, and, it seems from the energy FUD, we've seen big people come out and say, oh, this thing doesn't really do anything. Ethereum's got crazy use case. It's got good use cases. It supports smart contracts. It does all these things that, are, life changing, and, they can do things in and out that, give us a way that we can, keep moving forward and keep progressing this technology. So, alrighty, guys. I think that is all I had for today. Before I go, I think we're looking at the Bitcoin chart. I did this yesterday or a couple days ago. I just pretty much mapped out our key resistance levels. We're sitting at about $42,000. This was just from this. I think this is literally from last week. So just take a look. I mean, I don't give her too much slack. I'm still bullish. I haven't changed my narrative at all. We just got to work back up to what we were, and what we saw is all healthy. We've talked about it too many times, and it's not something I'm gonna come on here and be a broken record about, but patience ultimately is key. Looks like we've done very well somewhat in our recovery. Being above 40K, like we talked about, is very important for us. So us being at 42 is big. That's really big. That's good news. It was very scary down here these past these 1, 2, 3 this whole week right here. This whole section right here was very scary. That was definitely we thought we might be in for some hurt. Like I said, we're not out of the woods yet. I don't think. I'd like to see us above 50. For stabilized above 50. So, we'll see how it goes. We'll stay apprised. We'll keep the head on straight, and, we'll see how things keep going. But we're looking all right, and this is something good that I like to see. So, we got a couple resistance levels to go through. We got to go through 42, or this is about 44. And we got to go again, 52, and then we again, of course, our previous all-time high was 65. So, staying apprised, staying patient, we will definitely be okay. Absolutely. Alrighty, guys. I think that's the last thing I want to cover. I don't double check and make sure I didn't miss anything, and if I did, I'll keep it. I'll make a separate video. I got some separate YouTube videos dropping probably. I'm going to probably record today and get some out this weekend for you guys. We're going to go over some DEXs, and we're also going to be going a little bit more in depth with ZK rollups and Ethereum. I think that's a big one for you guys. I think you guys need a real in-depth guide on Ethereum and just kind of, I can explain the developer side, but I think just the overall network, I think that's a good video for me to make. But I think you guys mostly get it. But I'm just always thumbs up on clarity, making sure you guys really understand this stuff. So, alrighty, son. Appreciate you, John. Always, son. Thank you for chiming in today, man. I really appreciate it. Share this with any friends or family who needs it. Have a great time in Miami. Of course, I'll see you beforehand. Have a great time. Everyone, John's going to Miami for be around the Bitcoin conference, so I'm very jealous. And I kind of overdid my schedule this year, so I will not be attending this conference this year. So very sad. But alrighty, guys. Have a great day. I will talk to you guys all soon. I will see you guys probably this weekend, or if not before. Alrighty, guys. Bye-bye.